let's take the discussion on market with Santosh Singh, who's joining us from Motilal Oswal AMC. Santosh, afternoon. By the looks of it so far, Santosh, how are the earnings, at least momentum for this quarter looking?
So it's broadly in line with what we have been thinking about the earnings. So neither there are big upgrades or downgrades. Across the sector, if you see, IT has been slightly weak, but others have been sort of in line with our thinking on the numbers.
Area which you look at very closely, financials, power lenders are saying that not only recoveries are starting, some of them are actually seeing their credit costs come down. REC, for example, REC PFC. And overall, the sense we are getting talking to them is that there is a lot of focus on improving efficiencies. Do you see further scope of re-rating, or bulk of it is already captured in?
So I'll not get into the stock, but let us see the history of the power lenders, right? This history is that in 20 years, this is the fourth time or the fifth time I'm hearing that the efficiency in the power sector is improving and the lenders will do well, right? If I look at for 20 years, this is how it has been turning out. Means I would agree that incrementally every year we have progressed, but what has happened is this sector has been driven by two factors. One is demand, and then second is sort of restructuring of the book. The stocks, if you look at, they start doing well when the restructured book is either written off or sort of provided for, and then you'll have 3-4 years of great numbers, and suddenly after 3-4 years, we have seen again them getting into the same trouble. So I'm not saying this will happen again, but my worry is that if something has happened 4 or 5 times in 20 years, I would be slightly conscious of numbers before getting too much into them.
Valid point, very valid point, Santosh. I would say that yes, appreciating what the efforts are doing and the numbers which are coming out, but also don't forget that it has this cycle kind of the cleaning up of the books, then starting afresh, then fourth, fifth year things go bad, and then again. So in the last 2 decades, you have seen it happen 3-4 times. This time you are expecting this to continue, but you have not forgotten the lessons from the past. Okay, fair point. What about the other area, IT? This morning, Cognizant has come out and again sounded off very negative. But then 2 days back, KPIT had raised their guidance. So while mid-tier is witnessing good growth, the large cap universe continues to languish on demand. You had a buy call on IT some time back and it did play out, but then how are you reading things right now?
So let us segregate IT in two parts. One is the services part and second is the product part, right? If you're looking at the product part, there is a lot of tailwind on the auto segment of it. And the company we're talking about is in the auto segment on the product side. So there is a lot of tailwind on the auto segments. And I'm also more bullish on the product side than compared to the sort of services side as of now. So that's first part. Secondly, definitely there is a gap between the mid-tier, even on the services, the mid-tier and the large ones, right? The large ones are generally driven by the overall demand scenario in the demand environment. They can't be sort of bottom up wherein they can gain some market share in certain segments, given the size of the Indian IT companies. Right. So unless and until we see a good recovery or sort of the US starting to start to say that okay, now we will sort of start spending, we are not going to see big sort of demand coming in. But mind you, one factor you should remember is that a lot of hinged on the interest rate hike, and what we are seeing is that we might be nearing the end, right? Yesterday, it almost seemed like that we are nearing the end of the hike cycle. So that might be very positive for the IT sector.
Let's talk about the lender universe once again, Santosh. The universe which is actually catering to Bharat for that matter, Mass Financial, Satin Credit, even Utkarsh or maybe Ugro numbers came out. That appears to do growth is very good. Would you be careful on asset quality there? Do you think we are in mid-cycle from here on?
So I have a hypothesis while investing in these companies that when everyone is telling you that the numbers are bad and the valuations are low, you should sort of buy whatever you can, because uh, this is a segment where see the yields are very high. So whenever the interests or whenever you see the credit cost coming down, suddenly the profitability jumps like anything. But which one should be always careful about is that once after 2 3 years, you again see some spike in the credit cost, and suddenly everyone becomes negative and the stock starts to fall. So I would definitely say that we are somewhere in the means mid cycle only on this, and there might still be some way to go in this particular segment. But I always say that you should buy when the stocks are trading at their 3 4 year low, and then sort of move out of it when they sort of start trading at two book or more than two book. Barring one or two entities which are more structural, you should just sort of start coming out when they are come more closer to two book.
What about there is a payments bank which is now about to become a small finance bank, and numbers came out very well over there as well. So I am just taking it for a case study, no particular stock reaction. Whenever a payment bank converts itself gradually into a small finance bank, what are the areas of profitability and growth which open up? How does the complexion change of the entity?
So see, the way I look at payment bank is that it's just a opposite license of a lender turning into a bank, right? So when a lender turns into a bank, what it has is the monetization part ready, but they need to sort of start spending into creating distribution and liability. Whereas a payment bank, when it starts, first creates distribution, sum of liability, and then it can monetize through lending, right? So, so when you are looking at a payment bank, what you need to remember is that they have done a lot of expenses, right? The distribution or the liability creation expenses they have already done to a vast extent. So whenever they get a time to monetize, unlike a lender turning into a bank where you see cost to income going up, suddenly here the profitability can sort of grow significantly. And I would hazard a guess that it can even multiply given that your costs are not going to be high and they are raising money at such a low rate.
Interesting. How are you looking at the PSU bank valuation, the mid-tier PSU bank valuations at current juncture?
I think the most of the upside is done there because see, you are already giving them closer to one, certain cases even above one sort of price to book. Now from here on your credit sort of the positivity from credit would not be there. Now what you need to see is the growth, and where I would think that they are going to lag the private side of their counterparts. So the EPS growth from here on may not be that high. And the second part is, means other than a few large PSU banks, we have seen the credit sort of behavior of the mid and the smaller PSU banks lagging over a longer period of time. So again, I would say the value trade here might be coming to closer to an end, and one should be careful while thinking about investing more into these areas.
Santosh, where are you finding risk reward? What kind of themes or areas or pockets or if you can narrow it down without taking names, where you still find risk reward attractive?
So see, one of the and I have keep saying that I have slightly contraband of mind, right? So when the one area I think is definitely financials outside banking, because I see there the valuations are still low. They have come off from bad times. They have still not got into the greatest period of growth, and those are more structural and less cyclical than the lenders. So that's one area I'm positive on. The other part is IT definitely, and I've been pointing out that incrementally I would gradually sort of keep getting positive on IT with every passing quarter, given that we are coming very close to the end of the interest rate hike cycle in the US. And once the US demand starts to come in, this time you don't have the problem of supply, right? The employee relationship is tilted slightly towards the employer. So you'll see margin expansion also coming up there. So these two areas actually I'm much bullish on. And within financials also one part where I'm significantly bullish on is payments actually. I really like that space. Means the monetization as of now is low, so all the negativity is already there because they're not able to monetize. But these companies are becoming really large. I know when they can monetize, the sort of profitability they can create could be big.
Thank you very much for your time, Santosh. By the way, viewers, there's one play in the listed universe right now. The only listed payment bank is Fino Payment Bank. But we were talking about the sector per se and not any particular stock. That's a disclosure from Santosh, being from an AMC, only talking trends, themes, and that's something you have to draw inference from. We'll take a short break, come back, and more news and update and analysis. Don't go.